following my page ACCA with Amin on either of YouTube or Instagram. Today I'm going to explain you about one of the most important IFRSs named IFRS15, revenue from contracts with customers. People normally use the older version of the standard revenue. However, after 2018, when the IFRS 15 became applicable, the companies just turned into use of these new standards instead of the older version of the standard named revenue standard in the IASs. As you know, this standard is going to discuss on several items in many areas, which all of them are important. However, today I'm going to discuss mainly on the areas that the students of ACCA might possibly face with during their FA examinations, or even in their FR examinations, formerly known as F3 and F7 examinations. And that part is the revenue recognition steps. So basically our subject is IFRS 15, revenue from contracts with customers. And today we are going to discuss on 5 steps that we have in order to recognize revenue as per the IFRS 15. So in IFRS 15, I do apologize. As I just explained, the subject is revenue from contracts with customers, and that's the key point. The word contract is really important. IFRS 15 has got 5 steps. The first step says, okay, if you want to say that we're gonna recognize the revenue, where is the contract? There must be a contract between 2 parties. This is party A and he or she is party B. There must be something written with the legal nature which says that person A is going to do this and person B is going to do some acts as per this contract. So when we made sure that we have a contract, then we need to go through the context of the contract, the provisions of the contract. For example, what are the obligations of person A? To pay, for example, $100. What are the obligations of person B? For example, provide goods and services. I just made it clearly distinct and didn't just say, for example, goods or services. I just mentioned them both together. Why? Because in step 2 it says to identify the performance obligations. The clear word here is S. It means that not only we can have a performance obligation, but we can have more than, we are capable of having more than an obligation. So that's the case. We might have 2 obligations. Like in this example, the first obligation is to provide a good. The second obligation is to provide a service. Imagine that I purchased a TV from you as the vendor. You just have signed a contract with me. You have promised to provide me with a TV like in a week time, and then you have promised me to provide me with after sales services for 2 years, and then it has been mentioned in the contract. So okay, we have a contract with a legal nature. Both of us are obliged to act as per that contract. Now we have 2 obligations in the contract for you as the vendor and 1 obligation for me as the seller. And what is that obligation? Is to pay your money. So the third step in IFRS 15 recognition steps is to recognize the revenue. Is to identify the transaction price. I'm a little bit curious to find out about the revenue, so that's why I just made a mistake. So identify the transaction price. It is absolutely understandable. Why? Because when we sign a contract and we understand that we have some obligations, then definitely we need to pay an amount of money in order to start the business, in order to start the procedures and the rest of the things. What is that transaction price? For example, we have a contract. You are going to provide maybe the TV and service, and I'm going to pay you with $1 million. That's it, or $1,000. That's it. This $1,000, the whole amount would be either a fee or even the contract price, whatever we can mention it. That is transaction price in shorter form. Okay, now I have the transaction price available. However, I have a contract. The first obligation is to provide a TV. The second obligation is to provide a service. And I have mentioned that I'm going to charge you with $1,000. The question coming to your mind is that how much of this $1,000 is for TV and how much is for this service? We need to identify this. We need to allocate this $1,000, a part to TV, a part to service. But how? Based on the contract, based on the information available, based on the methods that we may have, which I'm going to explain through use of an example, which is quite a bit understandable for all the students who might have this question in their mind, whether it is easy to calculate or not. And when we do this, we normally can say that everything is alright. Now it's time to recognize the revenue. When to recognize the revenue? After we have satisfied our obligations. In the context of standards, it say that recognize revenue when each performance obligation is satisfied. Let's deal and see how can we do that. Imagine, look at this example. Amin and, for example, Peter signs a contract. Peter is provider of mobile phones. They deal to make an arrangement for 12 months with installment of $45 per month for a phone with a SIM card, which is going to be active from the very first day of purchase. Okay, Peter sells the phone separately amounting to $400, and the charges for use of the SIM card alone would be, for example, $10 per month. The question requirement is identify the contract as per IFRS15. Let's see what we are going to do. Actually, this is an example from myself, so probably some parts are not making sense. That's because I just made it right now, but I need you to understand it. First, it says Amin and Peter signs a contract, so we are going to identify the contract. How can we make sure there is a contract? Because it says that there is a specific timing for the contract, 12 months. There is a price. Actually, there are two parties involved, Amin and Peter. They have signed it. It means that they have agreed on, parties are agreed on acting as per the contract. Okay, so we have a contract. What is the contract? A contract between Amin and Peter. So this is the first step, identify the contract. There is a contract between Amin and Peter in order to provide a mobile phone with a SIM card, which is going to be active from the very first day of purchase. So phone with a SIM, which is going to be active from very first day of purchase. That's it. This is the contract. What was the second step? To identify the performance obligation. Okay, I have two performance obligation. Peter is going to provide me with a phone with SIM card service as well. So I have two distinct services. There are two distinct obligations for Peter. One for the mobile phone, which is a good, one for the SIM card, which I can consider it as a service. So I have two different obligations. The third step was to identify the transaction price. All these together for what amount? $45 per month. This is the transaction price. If we have signed it, then Amin needs to pay Peter $45 at the end of each month. What is the transaction price? Guys, transaction price here is $45 times with 12 months, because we have signed a 12-month contract. So 45 times with 12 gives it what? 12 months times with $45 gives us 550. Yes, that's it. This is the transaction price. Now I want, how many obligations do I have? Obligations. First, phone. Second, SIM card. How should I allocate it? The allocation method at which I'm using here is this. Guys, what is the standalone amounts for each of these products? First, phone, if sold alone. SIM card, if sold alone. I need to have their standalone amounts. What are they? In the question it has said, Peter, if he wants to sell the phone separately, he's going to charge $400 and $10 per month for the SIM card. Okay, $400, and then probably $10 times with, we can say $30. It is better, $30. In the exam question I'm going to change $30 times with 12 months give us $360. So I just changed the question. The fee for providing the SIM card services is $30 per month, not $10. Okay, what would be the total amount? It would be 760. You agree? Yes. Phone alone 400. $30 times with 12 gives us 360. So aggregated amount would be $760. Guys, this $760 means 100% off the price that we could probably have if we had to sell them separately. Now, we just make a simple proportion analysis. How can I do that? I can say, what amount of 760 is for the mobile phone? I can say 400 times with 760 gives me around 53%. You agree? Yes, 53% of 760 is for 400, which I have used for providing the mobile phone to the customer. The remaining 47% is for the SIM card. Now, I have two important proportions. What was the total amount of my contract? It was 540 if I just purchase them together. How can I allocate? I can say that 50% is for phone, 47% for the SIM card. Now simply you can calculate it. How? Let's just do it. 540 times with 0.53 gives me 286. The remainder would be for the SIM card. $254. Yes, that's it. I just allocated the price into the different obligations. Now everything is ready. I just need to understand how to recognize this, when to recognize this. That is the fifth step. When to recognize this. For the handset or the mobile phone, our example, it was phone. At a point when control over handset passed to customer, when I have transferred the control of the asset, it means that when I just transfer the title deed of the asset to the person, I call it the customer. That's the moment I now can recognize the revenue of $286 or $286 in my books. When I make sure that all the risks and rewards have been transferred to the customer, he has the full control over the asset he has purchased. This is the time that we can say that we have satisfied all our obligations, and then we can recognize the revenue. What about the service? Over the 12 months, it means that every month we're gonna have a bill from the mobile provider, SIM card provider. So when we receive those bills, we can make sure that okay, everything is now satisfied. We need to recognize the revenue. We're gonna deliver the bill to that person. For example, Peter delivers the bill to me. I understand that okay, this month I have used this amount, and then he can recognize the revenue in the books of accounts. Those were the 5 steps that we have in order to recognize revenue as per the IFRS 15. Another time, identify the contract, identify the performance obligation, identify the transaction price, allocation of transaction price to the performance obligation, and make sure that all our obligations have been satisfied. These are the 5 steps. You can find these examples on both FA and FR mostly when you're going to sit for your examinations, and I hope that you all have understood it very well, because this is a really important area, and I believe that by understanding it you can achieve the related marks in your examination. Thank you for watching this video. Please don't forget to subscribe my channel on YouTube as ACC with Amin, or even if you have not followed my page on Instagram, please follow me on ACC with Amin on Instagram. Thank you very much, and I hope you do your best with your future examinations.